Okay, so good evening, everyone. Welcome once again to this special project webinar. This is on behalf of Citygate House in Leicester, and delighted tonight that the fundraiser and principal of the SPV, Vijay Patel, is able to join us for this special webinar. So good evening, Vijay. Thank you once again for making the time to join us on a project webinar.
That's fine, thank you.
You're good. And how's life up in Leicester these days?
Good. It's quite busy. I was on site today, so we're completing the strip out, so that's going quite well.
Excellent, excellent. And also joined tonight by Dal Ray. Dal has joined our team recently, really looking after all things investor relations. His official title is Investor Portfolio Manager. And for any of the investors on tonight, if you have any follow-up questions, you'll be able to email Dal and he'll be able to look after you. So good evening, Dal. Welcome to the webinar.
Indeed. Yeah, good evening, everyone. Yep, thank you, David.
Fantastic. So listen, let's get straight into it tonight. I want to try and cover a lot of information to about 7:30, and then I'll wrap up with the process of registering and investing. So let's just get straight into the presentation. So let me first of all just give what we call the compliance and regulatory disclaimers. So Leo Crowdfunding, we are a appointed representative of a company called Sharon Limited. You'll see along the bottom there. Now Sharon is authorized and regulated by the Financial Conduct Authority. Pitches for investment are not offered to the public, and investments can only be made by registered investors on the basis of information provided by Leo Crowdfunding. So we are providing information tonight. We're not giving financial advice. We are simply sharing information, and you, the investor, will look at the information, do your own due diligence and analysis. And if you feel this suits your investment portfolio, then of course you can invest. And if not, that's your choice. But we are providing the information tonight, and it's brilliant that Vijay has been able to come so you can hear directly from the fundraisers. So let me hand over to Vijay. I think Thomas may join us. I know he's just been caught at the minute, but he may be able to join us. But Vijay, I'll hand over to you to give a bit about your own personal background, and perhaps you can talk about Thomas a bit as well, please.
Yeah, sure. Thank you. Okay, I've been in the property game for the last 10 to 15 years. In the last 10 years, we've been doing the PRS schemes all over UK. We currently got about 17, 18 sites which are quite active throughout, from Portsmouth to Leicester, Nottingham, Liverpool, Edinburgh, and Swansea. We've got about 6 or 7 sites in Leicester, which we've finished projects from ground up, refurbishment of offices. And we've also got a PRS scheme, a buy-to-let scheme, which we did about 2 years ago in Sheffield for 247 flats, and we sold that on a forward funding basis to Granges. And currently we're involved in a PRS scheme in Leicester for 116 units and one in Nottingham for 117 units. So we got variation of schemes starting from 80 units to 260 units. We just completed a large funding scheme in Edinburgh for 260 units with the Maslow Capital, and we finished that 2 weeks ago, and the contract was on site from last week. And
so I think the key takeaways that certainly from looking at your track record, and obviously we've had to do a lot of due diligence in terms of the projects you have done in the past, Vijay, and certainly we've highlighted there probably around about 27 projects, and you've also done 5 in the Leicester area, which I think is very important for this project because it's in Leicester. Leicester is somewhere that you know exceptionally well. You know, you've done multiple projects there, so therefore your knowledge, you know, is very, very high of the Leicester area.
That's correct, David. And we've got currently 3 projects which are up and running and fully occupied. It's a student accommodation scheme, and we're currently working on a site in Leicester also for 117 PRS scheme, which has been 4 months into construction, and that's been sold to a German fund, Rothschilds, on a forward funding basis as well.
Excellent. Okay. So do you want to just introduce Thomas and what he brings to your team?
Yeah, sure. Thomas has been working with us for last 12 to 14 years. He manages all the finance side of the business for us, and also brings in new funding, and also on the exit when we do the refinance and everything. So he's really involved in refinancing. He also works with a couple of crowdfunding to raise funding for other assets as well within London and UK.
Yeah. Okay. And I say he may be able to join us as we go along.
Yeah,
certainly
he should
Thomas has
join us.
been. Yeah, and Thomas has been on other project webinars that we've done. So any of the potential investors on the call tonight, you can go onto our YouTube channel and you can access previous project webinars where Thomas has been there, and certainly he's the guy that really goes through the numbers in a really sort of detailed manner, and it's good hearing him do that. So this is a summary. Tonight we're going to run through sort of a lot of information quite quickly. If you please put any questions that you have into the Q&A box. So we don't use the chat box. If you go to the Q&A function, and if you have a question, then please put it in there. As time allows, we'll try and answer those questions, and Dal will be looking at those, and where it's appropriate, bringing those into the conversation. If we run out of time and there's questions we haven't been able to answer, don't worry, we will email out separately, and we'll also add them to the forum, and we'll be able to get them answered there in a way that will let everyone see the answers as well. So Q&A function, that's the place for your questions tonight. So in summary, what is this project? City House, Leicester. It's a build to rent scheme, 56 apartments. It's a commercial to resi. It's an old HMRC building. The equity raise, the maximum target is 600,000, and the projected ROI is at 20% per annum. Now this is estimated to be an 18-month project, and the minimum investment that someone can make is £1,000 into this project. So that's, if you like, the summary. So Vijay, tell us a little bit about the actual location in terms of where is it in Leicester, and what are some of the key benefits of the location, please?
Yeah, sure. Okay, it's right in the town centre where the main shopping centre, High Cross Shopping Centre, is, and it's literally like 3-4 minutes walking distance from the shopping centre. This particular building used to be the ex-HMRC building, which we acquired. We acquired about 18 months ago. We exchanged on it 18 months ago, and we've been through various planning pre-app applications where the car park is next to the building. We've got a positive pre-app for 38 units, and that's going to be the second phase as we go along once we finish the current building, which has got the planning PD consent for 56 units. We've since we completed on the purchase from April, we have managed to strip out the whole building, and the contractor have just finished the last floor this week, and then the idea is they'll start building up the 4th floor and come downwards.
Mm-hmm. Okay, so in terms of the location as well, I mean, it's near the main train station, which obviously gets you into London very quickly. Abbey Park, which is quite an attractive.
Right behind the site, and the train station is like 15 minutes walk, and the trains to Euston Station is like 55 minutes. So it's quite a quick journey, and in the beginning, I mean, a lot of in the mornings, commuters and a lot of people commute from Leicester to central London for work as well. So it's quite a easy ride in the train. Yeah,
and I was quite fascinated with the Abbey Park, and that, given what's happened with COVID, that if you're 3-4 minutes walk away from a place to exercise and fresh air and trees and grass, that's got to be an attraction as well as we move forward into the unknown with lockdowns, etc. So certainly location very, very strong, and that brings us on then to the actual project. So you've already covered it a little bit, but do you want to just explain sort of the 3 phases? I think it's a good time to explain that, and then just in terms of your the preferred exits, we've obviously listed 3 because who knows the future holds, but you can just maybe talk us through what would be the best case scenario, and then what may happen if that isn't achievable, at that moment in time.
Okay. So the existing planning consent for the existing building under the PD is 56 units. And we want to try and finish that within next 12 to 14 months. And then the idea is to then go into the second phase, which is the car park, and create 38 units. And then on the existing building, while we're doing the current fit out and internal fit outs, we're also doing the roof work. So we can we're looking to put a planning application for a single story or two-story extension on top of the existing building. That will give us an additional 14 units. And we're getting all the work done now. So when we finish the building, we can work from the outside of the building to create those 14 units. And in the past, we have done an exit with the funds. We sell it to a fund. Historically, we've sold about 5 assets to each fund when we finish the projects. On this one, if we get to the second stage, second phase, the idea is we will be talking to an institution and selling it on to them, or refinance it when we do the 56 units, and then work on 38 unit flats. And when we finish the 3 phases, the idea is to sell the whole block individually or as an investment to an institution.
Mm-hmm. Okay. Yeah. No, thank you for that. So just to really highlight that, so that investors are clear. So in an ideal world, the time the first phase, which is the part that's blocked off there, that's the existing building of Citygate House. So this fundraise is for this first phase, 56 units, PD planning. So as Vijay said, they've stripped out, they're ready to start the refurb. The best case scenario would be by the time that gets completed, then the planning is all through for the car park phase, in which case at that point, there could be a forward fund purchased by an institution. That would be the ideal scenario. If it isn't quite lined up for that, then a refinance of this existing building that's been refurbed can exit the investors. And then as if you like, a fallback or the last resort would be a sale just to another entity other than a fund, or sold individually if it needed to be. So hopefully that's quite clear in terms of the exits. But it's fair to say, Vijay, your experience, your expertise, and you've done this numerous times. It's going to funds and selling this type of project to a fund. That's your model. That's what you do successfully, and that's the intention here.
Yeah, the idea is to fully rent it out and stabilize it for 3-4 months, and then sell it to an institution on a good return.
Excellent. Okay, no problem. So again, remind everyone, I don't think, Dal, any questions in yet?
No, not at the moment.
Okay, that means you're doing a good job, Vijay, at explaining everything. There's no questions yet, but again, if there are any questions, just get it into the Q&A, and Dal can insert those into the conversation. Okay, so let me just confirm exactly the current status of the project. So right now, as we've said, the minimum target is 400,000, maximum 600,000. On the platform currently, we have 300,000 of pledges from 21 different investors. So another 100,000 takes us to our minimum of 400, but obviously we're aiming for the full 600. So just to explain why 600. So back in about March, April, I know some of you will be aware that we had this project on the platform. We had raised over 400,000. But Vijay, you were at a point where you needed to complete, and we still had paperwork to do and draw down, processes that need to go through. So you made a strategic decision to do a vendor loan agreement for 500. You put another 100,000 of your own money in to take control of the asset at that point. And now you're coming back to the crowd to, if you like, exit that short-term finance that you put in place. Is that a fair summary?
That's about right. Yes, David. That's exactly what the reason why we had to complete was that all the HMRC assets they were selling, they had to be completed by end of April. So hence we had to complete it, which we did successfully with funding from Bridge as well, which is the civil funding, which hasn't got interest coupon on it.
Yeah. Okay. We can we might mention that when we come to the finance. I think it's actually worth, Vijay, just taking a short, maybe 30, 40 seconds and explain who the vendor was, or the sort of the history of the building, because this is something, again, investors can check out. It's public information. So this was actually a government-owned building. You want to just explain how you came to be offered this as a potential project?
REI are quite a successful property investment company. They've been going on for good 20 years, and they acquire and procure quite a lot of good government assets. And then what they do is after a couple of years, then they try and sell them on, and that's we work quite closely with REI and when they're disposing the assets, and then we pick the assets up. And this one of these assets, Citygate House, was the asset which they were selling, and we obviously exchanged with them 18 months ago.
Yeah. Okay. So people, investors can go on and have a look at REI. You'll see Citygate House listed as one of their assets at one point. They've got about 200 million, which is a publicly quoted company, 200 million under their portfolio. So, you know, a big entity that you absolutely can go and research for yourself. Vijay has, as part of the due diligence that's required from our end as a platform, he has supplied us with the contract, and you can see there Real Estate Investors PLC and Student Vault Management Limited, which is the SPV that now owns the asset. So we have been shown, Vijay's had to supply the full contract to confirm the obviously the purchase and the terms, etc. So that hopefully brings you up to, if you like, the up to date of where we are now. As Vijay said, it was April was the completion, and I think the fact, Vijay, that you now own the asset in your SPV actually acts as a little bit of a risk mitigator, because before investors were investing with you to make the purchase. However, now you own the asset. You've already started to work on the asset, and therefore the SPV, I think, is in a stronger position than where it may have been back in March.
That's right, David. And the idea is that we as soon as we acquired the asset back in April, we took a decision to start working on it and get the building ready with the street part and everything. So that was the first enabling package we've done with the contractor, where they've gone in, and it's 12 weeks project where they're gonna strip the whole building out back to bare basics, and then you give us an opportunity to start refurbishing it.
Okay, brilliant. So before we go on, then, any questions, Dal, come in yet?
We have got one, yes. Does a sale to an institution of phase one, so i.e. this particular raise, depend on the successful build completion and stabilized rental of phase two and or phase three?
It works on phase one and phase two. I mean, the idea is that we have a quite detailed pre-approval from the council, and we are looking to put an application in soon. We're just tidying it up. So all the design team are currently working on the existing building and getting the stage 4 drawings. And the idea is to finish phase one, and then as soon as we get the consent for the car park, we will then package that and offer it to 2 or 3 institutions we work with, and see if they're interested in taking it on a completed basis. So at the moment, we're just working on the PD phase, and once we get the consent for the car park, we will then combine both A and B phase together.
Yeah, I think I've heard you, Vijay, mention in the past that most funds or institutions usually want to see around about 90 to 100 units.
That's correct.
To make it financially viable. So phase one on its own being 56, it'd probably be challenging to sell that just as a standalone entity. So really, I think what you're saying is you need phase one and phase two combined to give you the volume of units that are then attractive to an institution or a fund.
Yeah, because they normally held it for 5 to 7 years, and the idea is they read minimum 100 units, and by the time we do the first phase and the second phase, and hopefully under the PD consent, we can get the single story or double story on the existing building. That will give them enough units to take on the asset.
Excellent. Okay. Okay, so you have mentioned already that you've been able, because you did make the purchase back in April and obviously own the asset, you've been able to in some ways save time by getting the team straight in to do the strip out. I believe the strip out is now complete, as you've indicated. So we've managed to send some good up-to-date photographs of the team on site. In terms of the time scale, Vijay, I know it was 18 months was the original estimated time scale. In terms of the work schedule, is that what you anticipated? Or are you ahead or behind time? Or
no, we ahead of time, because I think we allowed 18 months for the whole refurbishment, but this last 3 months, the strip out is almost completed now, and the design team are working on the working drawings for stage 4, and they're quite advanced on that as well. So we just making sure that all the services and everything are coming in correctly, and that's where the design team are at the moment. Yeah. Okay. And yeah, your updated photographs show obviously the trees having to be taken care of on site and the strip out at the different floors. Floor. That's the final floor on the ground floor, which has been finished off now. Okay, excellent. And this used to be an HMRC building, so these were all government offices at one point. That's correct. Yes, that's right. Yeah, excellent. Okay, brilliant. Okay, so just in terms then of the actual investment information, just again to be clear to the investors on the webinar tonight. So the raise amount, as we've said, is 400,000 minimum, 600,000 maximum. The length of project is estimated 18 months, and the return on investment is a 20% per annum. And again, this is over an 18-month period. So how this works, this is of course equity. This is not debt. There's no security or charges or anything like that. It's a common priority share. Priority in the sense that the first profit that comes in from the project goes to the investors. So the investors receive their return projected to be 20% per annum before Vijay and his team are able to access any profit. So that's what we mean by a priority share. So we liken it sometimes to a buffet. If you had a buffet in your house and you invited your friends round and some colleagues round, you let them go to the table first. They'll take what food that they want. And then if there's anything left, then you go to the table. You don't tend to rush to the table first to eat. The guests eat first. So the investors, the passive investors, the crowd investors, they eat first. They get their profit share first. And then Vijay and his team after that. Now, some may ask, well, what happens if it's only 400 and not 600? Well, Vijay has committed and shown that he also has the wherewithal and the assets to cover any shortfall between the min and the max. So if we reach 400,000, that doesn't affect the project in any way. Now, Vijay has also sort of made a gesture to the investors, because there is a degree of uncertainty with COVID and who knows what the next 12, 14 months hold. So what Vijay has been willing to do is, if the project goes beyond 18 months, then after 18 months, the 20% per annum would rise to 21% per annum on a pro rata basis. So that's a gesture that he's made. And I suppose, Vijay, it puts you under a bit of pressure to make sure you meet the 18-month deadline, because you don't want to be paying out more than you have to, obviously. That's well, I think we won't get to 18 months. I think around about the 15 months we should be finished. Yeah. Okay. So at least that mechanism's there. So moving on then to the financials, and we will point out as we close that this information is in way more detail in our equity offer document, and we'll tell you how to get that in a moment. But just in terms of pointing you in the direction, the GDV on this project is just over 7 million. And you can see the whole breakdown there of the acquisition costs, the construction costs, the finance costs, and that all obviously comes to the amount there. So you see at the bottom is probably the what I call the interesting figures.
profit on total development cost before finance cost was 22%. So profit on GDV 17%. So they're usually figures that people will ask straight away for, to give them an idea on the figures. So we obviously don't have time tonight to break this down in huge detail, but maybe just comment, Vijay, on the price per square foot. So obviously you've done a lot of projects in Leicester, and you've gone with a price per square foot that you feel is very conservative in terms of being able to build, and yeah, you're obviously comfortable with the metrics you put forward.
Yes, I mean the contractor we've used, I mean, we've been working with them for the last 3 years. They know our product and our finish, and this is where it's been fully costed out. So we are confident that they will come in within the price range we've got. Obviously, we know there's a material cost has increased a little bit, but this has been fixed with them 4 months ago. So they are buying to come in the fixed price contract we've agreed with them.
Okay. Yep. So on the left-hand side there's a summary just of the for investors particularly. So if we were to reach the full 600,000, you can see there then that what would be owed back to the investors is 180,000 over and above their initial capital, and that's based on a projected net profit of 1.224 million. So how this is expressed is that 20% per annum equates to a 14.7% of forecasted profit. So if you want to hold it in terms of profit share, it's effectively the shareholders will have a 14.7% share of the net profit. Is a good way to hold it. So as I say, there's more details in the equity offer document, and we can obviously happily answer any further questions on this. Dal, I'm going to be wrapping up here in a minute on the main part, and then we'll finish with registration and how to actually invest. Any other questions just in there we can deal with before moving on?
Yeah, we've got a few here. So previous time frame was 18 months from February to March 2021. As works have already started and we're ahead of schedule, does this mean the relaunch will be less than 18 months investment? If not, why?
I think it will be less than 18 months. So I mean, we've already been 3 months into strip out. So those 3 months, like I said to you right at the beginning, I'm confident that I'll bring it within the 15th month, within 14 to 15 months.
Okay.
Any other ones?
So Vijay, do you have your own in-house build team?
Yes, well, we don't have in-house built team, but we have in-house consultants, architects, and everything, which we've been working for the last 4 or 5. It's the same team on all our projects. So basically, the only team I've got slightly different is in Edinburgh. They're Edinburgh-based design team. So it's an external design team. We don't have anything in-house.
Okay. One more question here, Vijay. So it was mentioned in the first launch, the developer would cover any shortfall in the refinancing figures came less than expected. How would this work? How much of the shortfall is the developer willing to cover? I'm assuming this refinance option is plan B if there is no sale to a fund. How long will Vijay try to sell to a fund before considering option B, refinancing?
Well, normally what we do is before when we're coming to finishing the project, the PD project, what we tend to do is we speak to the existing funds we've been working with for the last 5 years, and then we will offer it to them as the current PD scheme and the car park scheme together, and then see what the appetite is, and if they're showing interest, then we will engage with them right at that point. And if not, then we've already got a refinance bank in place anyway at the back end. I have been working with them for last 3 years, and they have refinanced my 4 last projects to the tune of about £37 million. So they take out as an exit finance, which is a 15-year finance, and we can always go to them and they'll refinance the current building.
I think that last question, Dal, is a really good one actually. It sort of prompts me to mention the shareholder agreement. So questions like, how long does Vijay have to try and sell before switching to the finance option? That needs to be a defined period, and those sort of points are laid out in the shareholder agreement. So the shareholder agreement would be the document that investors will review as a final decision-making process, and it will lay out those sort of what-if scenarios. And but that's a really good point that person made. So thank you for that. Yeah, you've already, Vijay, talked about your planning consultants, your architect. You've been involved with them for a number of years of obviously high quality. So I think before we just move on to the last 5 minutes, I think again this is an important thing to cover, because in that the exit is all about primarily going to a fund institution. This is a sale that you made what, about 3 years ago. One project was in Leicester, one was in Edinburgh. So you want to just talk us through this, and then we'll head to wrap up.
Yeah, this was sold back in February last year when the COVID just started. We've been negotiating this sale with the 90 North for about 5 months, and we thought they would walk away, but they managed to complete in March successfully. So they've now, and they're all 100% occupied buildings. We have been managing them for about 12 months prior to that. Once we finished the projects, the one in Edinburgh was an empty site with a listed cottage right in the middle of the site, and none of the developers would purchase that site because of the listed cottage. We managed to pick it up, and we did a deal with the local authority, planning authority, that we would dismantle the listed building, take it away and bring it back and put it in its place, providing they give us demolition notice. We were the first one in Scotland to get a demolition notice on the listed building, and successfully we took it away and brought it back, and it's now a common room for the students on the site.
Excellent. Okay, so again, this is a good important track record of a build and sale to an institution and fund in recent years. So okay, so thank you for that, Vijay. I'll let you have a sort of a 1 minute wrap up in a few minutes. But if there are any other questions, now's the time to ask them, because we are moving to the conclusion of the webinar. This will of course be recorded, so we can give you a recording link if you want to go back over it again and just check some of the information. So let me just quickly point people in the direction. So I know we've got a number of people on tonight who are either newly registered to Leo Crowdfunding, who are on tonight having a look, and perhaps you're not even registered yet on the platform. So if you go to our homepage, leocrowdfunding.com, you can access the Citygate thumbnail. And when you click on that, then you have access to what we call the landing pages or pitch pages. So this is a brief summary of overview of the project, financials, look at the team, and then there's the forum where you can ask questions, and Vijay and his team answer the questions, and everyone gets the benefit of those answers. So from there, then you also can, once you've registered and logged in, you can download what we call the equity offer document. Now that's a very important document, because this is the document that lays out in detail the investment offer that Vijay is making to you, the investors. So you can go into there. It's a very comprehensive document, and you can read through, if you like, all the fine detail. And there's a whole bunch of annexes there with documents, etc. So I definitely steer people to the equity offer document. That's where you want to be looking for the information. Now, just in conclusion, if you're perhaps on here tonight and you haven't as yet registered, well, then you can, on the home page, you can see there, you can click to register. And let me just very quickly run through the process. There's a straightforward initial registration process where you leave your name, email address. You'll then get a confirmation email, and that gets you registered on the platform. However, you can't actually invest in a project until you are what's called investor ready. So what does that mean? Well, the first thing when it comes to investor readiness is you have to do what we call an appropriateness test. This is a short multiple choice Q&A, and this is really just to establish that you understand and realize the type of investment this is. This is equity investment. This does not come with a first charge or with personal guarantees. This is equity. One of the reasons why the returns or that 20% per annum, is that, you know, this is a higher risk than say having security and equity. Normally, if you have security, you're looking at a 6, 7, 8% return, whereas this is obviously higher. So you just need to understand the nature of equity investment. So it's a simple Q&A, and you answer that. Then you move on to confirm what type of investor you are. You can invest as an individual or as an organization. And then you'll have to designate if you're a restricted stroke retail investor, or whether you're a high net worth investor or a sophisticated investor. So it is important from the FCA point of view. These are 3 categories that they have. So you need to designate which category you are, so that you're clearly defined. Then you just have to upload your anti-money laundering, your AML, it should be proof of address, passport, etc. And then you'll receive a message that tells you that you've successfully completed investor readiness assessment. What that means is that if you choose to invest, then you can now invest in this project. So what is the process for investing? So when you're on the pitch pages, the landing pages, you can see there circled the next step. So if you decide, you've looked at the information, you think, yep, I want to be part of this SPVA, I want to be part of the journey, I want to maybe learn from Vijay and his team through this project. And we have a number of investors who invest in projects with the aim of learning, of improving their knowledge on how these projects work. So you click next step. And then from there, you'll be given your choice then of how much you wish to invest. So we said that 1,000 is the minimum investment. That's also the price of 1 share. So in this example, someone's put in 10,000. So they're going to get 10 shares. So you can see how that works. So when that's done, you've confirmed it, you then press continue to payment. And then you can choose either to move money into your e-wallet on the platform, or you can make a bank transfer. Now, if you want to go a bank transfer route, you can simply request your unique reference number. And once you've clicked the unique reference number and you've received it, that is a successful pledge. Now, it may take you a couple of days to transfer the funds, but you'll have successfully pledged in the projects. So it depends. Some people might need to move money from another account, but you don't need to wait to do that. You can make your pledge, request your unique reference number. That secures your investment pledge. Or if you wish to do it by e-wallet, again, that's absolutely fine as well. No issues at all. So then you'll actually receive confirmation that in this case, your investment pledge has been successfully recorded. So you know then that you have secured your investment. So let me summarize before I give Vijay the last 30 seconds. This is a project up in Leicester. It's a commercial to resi conversion of an old HMRC building, Citygate House, into 56 apartments. The equity raise, maximum raise is 600,000, 20% per annum projected, 18 months, might be a little bit less as Vijay has explained. Minimum investment is £1,000, and exit, primarily the aim is to a fund or as a fallback by refinancing. So that is the summary of the project from there. So Vijay, I'll let you have the final word. Any last for 30-second wrap-ups?
I'd like to thank everyone who's come on this webinar and participate with us on this lovely project going forward. Thank you.
Thanks very much. And I think, Dal, there's no other questions. You've dealt with those well.
Yep, indeed. That's all the questions answered.
Fantastic. Okay, well, listen, let me thank everyone for joining us tonight. It is recorded, so we can get a recording to you if you so wish. You can see on the screen there my email address, the support email. For Dal, it's just dal@leocrowdfunding.com. So you can ask any questions, and Dal can get back to you directly on that. So with that, can I thank everyone for joining us tonight. I hope that's been useful. We're down to about 10 days, or sorry, 9 or 10 days left on the project. So you've now got the information. Vijay's made himself available tonight, which we appreciate, to answer all the questions and to obviously give an update on the project. So it's now time to obviously look at the information and decide if you want to invest or not, and look forward to handling any questions. So with that, thanks everyone for joining us. Take care, and we'll talk to you all soon.
Thank you, everyone. Thanks. Bye.
Good evening.
Bye-bye now.